Hey guys, what's up? This is Andrew for TRENDLINES.com. So welcome to my second update. During my holidays, I'm still in Chambéry, as you guys can see, and I'm gonna move to Croatia on a boat, guys, very soon, like in a couple of days, I think on Saturday, something like this. And I'm gonna keep updating you guys over there. So today I want to make a big update, guys, on GME. I haven't made an update on the stock for I think almost 1 week, and there are actually a lot of things to say. So let's get into it. Alright guys, so as usual, let me remind you a little bit what I was telling you in my previous video. So basically, what do we have on Gamestop? So I'm going to start on the 4 hours time frame because this is the best time frame to use for technical analysis, as you have institutional clients and big investors, as well as short-term traders, day traders, scalpers using this time frame. So basically the signals you're going to find over there are the best signals. And here, the situation, let me remind you guys, we went to 480, then we corrected strongly, we bounced back to 350, and from then we had this very complex correction that I struggled a bit to analyze. And I don't know if you remember, guys, basically I lost my analysis, so I did everything again, so I don't have the same details I have before. But this was a complex correction, which is in the Elliott Wave theory, a combination of corrective patterns. So here I had zigzag, zigzag, and a flat. Then once this complex correction was done, we started a new 5 waves development, I think. So this is what I labeled here in yellow, that is going to go for me to 800, and the signal was clearly given. So here I told you guys we are going there since like 140, because I knew this complex correction was finally done. I mean, I knew, you never know for sure, but I had a lot of signals telling me that it looks like this complex correction is finished, because I labeled it very well using Elliott Waves patterns. And when we broke this level around the 200 level, which was for me the major resistance that we needed to break to confirm that a new impulsive move has started, we had for me the signal that GameStop finally started its new move up. So here I told you we're going to go roughly to the 300 area. We went to 350, and then I told you yes that we're going to correct to 220, 200. So this is roughly what is happening. So for now, for me, this is all good. This is all making sense according to Elliott Wave theory. Now, what I'm trying to do, guys, in this video, I'm trying here to, as I did here, but on a smaller time frame, when I'm zooming more, I'm trying to do the same thing. Here I have a one that is perfectly broken down into 5 waves. And I'm trying here to see what kind of correction I have. So I'm going to use the same method, guys, the same method. So stay with me. Look, you just type Elliott Wave principle, frost and pressure PDF. Okay, you go to the 4th link here and you come up with this Elliott Wave course that has been written, I think 20 years ago, something like this, by Preshta and Frost. Then here, I'm looking for the double threes and triple threes, guys, For those who are watching my video for some time, you know that I like to use this a lot, guys. All right, here we are. So Elliott called sideways combinations of corrective patterns, double threes and triple threes. So basically, these are the most common corrective patterns that we are seeing today. Before, we were usually seeing one zigzag, one flat, or one triangle. Today, we often have, especially in second waves, this kind of combinations of corrective patterns. So the little game consists of trying to make the price action fit the best with this kind of labeling. So this is what I'm trying to do here. So stay with me, guys. Here I'm having a zigzag ABC. Quite easy, guys. I remind you that a zigzag, the C wave of a zigzag has usually 5 waves. I mean, has always 5 waves. This 1, 2, 3, 4, 5 is a typical C wave. Then here, I'm not exactly sure. To be honest, it's really a struggle each time I have this kind of combinations of corrective patterns. I never know, guys, and I'm here, I tell you everything. I never know, you see, if I should make, you see my A wave, for example, I broke it down into a small ABC, but I could do my A wave here. I did that because this was the best way for me to fit what is happening here. So you see, each time I have some small ABCs inside of each wave. And then, so I have here my first zigzag, here my second zigzag. So A, B, C, And after this one, so let me get rid of this. I just wanted to show you this, guys, because it's interesting. So here, for example, like you just saw, I could do like this, then the B wave would be here, and everything would be basically happening before what is happening now. But I did this like this, guys, because I can feel that this is a triangle. All right, so I'm not sure of this yet, but if I did my counting like you saw, just like this, you know, so everything is one step before, then my triangle would be here. Okay, let me change the color of this. And I don't like it because here I have one reaction, one reaction, but here we don't go to this level. So maybe if we go there, maybe I would change my labeling. But for now, this is the best way for me to see the price action. And what is left for me, A, B, C, D. So I think we're gonna go to 220, then correct one more time to 210, and then finally start the third wave of the third wave, which as usual, guys, is gonna be very impulsive and is gonna take back some major level. Now, something I wanted to show you guys. Do you remember that I'm always telling you that once a resistance is broken, it's usually retested? So the breakout level here, guys, you can see. So as usual, during the breakout, look, very strong volumes here. All right. So it was the first time for a very long time we didn't have this kind of volume. So this is confirming. You can see here, guys, on the hourly time frame, that the volume happened here during the breakout at roughly the 198 level. All right. And then where are the strong volume kicking in again? Look on the hourly here. It's the strongest volume we never had on the hourly time frame since a very long time. So this is good. And this is happening where, guys? At the breakout level at 198. It didn't happen here. Here we didn't have the strong volumes, but they're starting to kick in. You can see, guys. So this is just a little reminder that, you know, patience often pays out in trading, because a lot of you maybe FOMO here and you bought some high levels. It's fine. I think we're going to go higher. But once again, when the breakout occurs, it's usually retested. So you have time, guys. And this is something that I like to repeat, because this is one of the keys to succeed in trading, guys. You need to be patient and to really enter your trades at the best levels. It's very hard, even for me, not to FOMO sometimes. You know, I see a breakout. I'm like, I want to buy it. I want to get in this trade because I know it's going to go higher and I don't want to miss it. True. But keep in mind that 90% of the time, the breakout levels are retested. So here you had two more opportunities to enter this trade at the very good level you had on the 25th of May. So once again, I repeat, so my view is we go here. So we completed the first wave. We are doing here a corrective wave. Yeah, and something else very interesting I wanted to show you guys. Look, when you look at the fibs, so I remind you what I'm always telling you, just by looking at the fibs. If you don't know where to put your trend lines, guys, so basically every move likes to retrace, second waves like to retrace to the 50 or 61.8% fib retracement. So this is 240 and 215. Between the 61.8 and the 78.6% retracement level, this is a gray area where basically you might reconsider your analysis. You know, basically it means that the bears are strong. And here, let's be honest, the bears are strong compared to this first wave. They put the price down quite a lot compared, for example, to AMC, where I remind you guys, we are in the fourth wave and we trade around the 38.2% retracement of the third wave. So this is very bullish. Here, we don't have the same bullishness, guys. This is weaker, definitely. But, you know, when I'm in this situation, you know, I ask myself, are you sure this is actually bullish? So of course I can't be sure, but what is here for me very bullish is that this is the second wave here is very messy. You know, once again, this is not impulsive. You know, it's not a beautiful 1, 2, 3, 4, 5. It's something messy. It's something that is corrective. So once you know, and once again, I can label it quite well using Elliott Wave patterns, which is actually confirming to me that this is corrective. So if this is corrective, I know that the first wave was definitely motive and that the third wave is coming. You see the reasoning? When something is messy and not clean, then you know it's corrective. Then you know that the market is going to reverse soon and that this is not the longer term direction. So here the longer term direction is bullish, This is why the second wave is corrective. One more thing, I like to talk about divergences. I'm looking for divergences all the time, guys. And when I spot one, I tell you. So here, I remind you on the hourly time frame, we had one here. So here, market making lower lows. And during the same time, as you can see, the MACD was making higher lows, all right? It's just over here. It's this one, all right? The regular bullish divergence, market making lower lows, and during the same time, the MACD going higher. So basically, the momentum is with us, and the bears are making, a lower low, but not with the same intensity, not with the same strength as they used to. So the momentum is actually shifting, and this means that the reversal is to come. So we still have this bullish hidden divergence that is playing out here, and I don't see anything else here. So I repeat, guys, what is my view? Did I tell you everything? So I talked about the fibs, moving averages. The last thing, guys. So I don't have much to say here regarding moving averages. I don't find on any time frame something that is fitting well. The best I can find, guys, is on the daily time frame. On the daily time frame, I have the 50 period moving average. This one, guys, in purple, that is giving me the best reactions, all right? And that is supporting the price. You can see it supporting here. Here it's, a fake out kind of. Here supporting the price, supporting the price, supporting the price. And here supporting the price again. So basically my level is, this moving average that is coming close to my triangle. So the levels to watch are for me on the short term 207. Then 202 and 197. Those three levels, if we go through those levels on the downside, it is not good, guys. It's not going to happen. I almost can guarantee it because I have all the signals that look good to me. But if it happens, careful. Careful. It means the bears are in control. For now, they're not. So, and of course, I remind you guys that my target is 800, and I found this level using fib projections. So I'm projecting the move here. I'm taking the first wave and I'm playing at the bottom of the second wave. 830, it really depends where I start my first wave. I need to go to 480, look on the right of the screen. All right, so somewhere here. So 815, is just an area. Of course, you can't be very precise when you do that long-term projections. But the 800 level is probably going to be the level we're going to reach before some longer and deeper correction. So guys, that's it for me. I hope you enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.